Welcome to This Explainer. Today, we're unpacking the absolute essentials of corporate strategy to help you build a practical toolkit for not just surviving, but really thriving in today's dynamic business environment. Whether you're leading a massive conglomerate or you're just trying to figure out how top executives make their big decisions, well, you are definitely in the right place. So let's dive right in by recognizing that business is, in a lot of ways, a modern battlefield. If you look it up, dictionaries often trace the word strategy all the way back to military terms, referencing ancient thinkers like Sun Tzu. And honestly, it makes perfect sense, doesn't it? Just like a general needs a calculated plan to win a war against an adversary, a business needs a strategy to conquer its market, outmaneuver the competition, and survive when there's just a ton of uncertainty in the air. We've got a really clear roadmap for you today. 1. Origins of business strategy. 2. Mintzberg's 5 Ps explained. 3. Corporate versus business strategy. 4. Core corporate strategy components. 5. The BCG growth matrix. And finally, 6. Does corporate strategy matter?
Okay, Section 1. Origins of business strategy. What exactly is strategy?
There are tons of definitions out there, right? But I absolutely love this one from Michael Porter. He says strategy is deliberately choosing a different set of activities to deliver a unique mix of value. The absolutely crucial point here is that strategy isn't just about working harder. And it's not about trying to do the exact same things as your competitors, only slightly better. No, it's about deliberately making choices to do things differently. It's figuring out how your organization can stand out and offer something entirely unique to your customers.
Moving on to Section 2, Mintzberg's 5 Ps explained, the strategy mindset.
Henry Mintzberg, a brilliant management thinker, by the way, argued that it's actually just too hard to pin strategy down to one single definition. Instead, he proposed that strategy can be understood through 5 different lenses, which we call the 5 Ps. We're going to break these down rapidly right now so you can add them straight to your analytical toolkit. The first P is plan. Now, this is the traditional view most of us are pretty familiar with. It means looking at strategy as a formal, premeditated roadmap designed to achieve a specific goal. You sit down, map out your objectives, and literally write down the exact steps you intend to take before you ever actually take them. Next up is ploy. This is where strategy gets a little sneaky, a bit more tactical and competitive. A ploy is a specific maneuver designed exactly to outwit a rival. Think of a sudden, temporary price drop meant to completely disrupt a competitor's new product launch. It's a quick, sometimes deceptive move just to gain an immediate advantage.
Then we've got pattern. And what's super interesting here is how it reflects the real world. Because, let's be honest, sometimes your strategy isn't what you perfectly planned in a boardroom. It's simply what you consistently do out there in the market. A strategy can totally emerge over time from your firm's actual behavior, even if you didn't deliberately plan it out from day one.
The fourth P is position. This is all about exactly where you sit in the market. It's that strategic match between your internal resources and the external environment. Like, are you the high-end luxury brand or are you the low-cost provider? Strategy here is finding and holding on to your specific, advantageous spot in the competitive landscape.
And finally, perspective. This essentially means that strategy is the shared worldview and culture uniting everyone inside the company. It's just this ingrained way of doing things. When everyone in a company naturally defaults to putting the customer first because it's literally baked into their DNA, well, that collective mindset is a remarkably powerful strategy all by itself.
Section 3, corporate versus business strategy. Levels of the game.
Okay, pay close attention to this contrast, because it's a really common point of confusion. Corporate strategy is handled by top executives, the CEOs, the board. They are looking at the long term, big picture, deciding which industries the company should even be operating in. Business strategy, on the other hand, is handled by middle management within those specific units. They're focused on the medium term, figuring out how to beat the competition within their particular industry. Basically, corporate strategy decides where to play, while business strategy decides how to win once you're actually there.
Now, the hierarchy of company statements from Collis and Ruckstad brilliantly illustrates how all of this connects within a firm. You start at the very top with your lofty mission, why you even exist. That naturally feeds into your values and your vision. But then you get to strategy, the actual competitive game plan defining your objective, your scope, and your advantage. And finally, that drops all the way down into a balanced scorecard, which tracks the exact metrics to ensure you are actually executing that strategy on a daily basis. Section 4, Core Corporate Strategy Components, Building the Conglomerate. So when you're managing at that high corporate level, you're primarily juggling 4 core components. First, resource allocation. I mean, every company has finite money and talent, so top management has to decide which divisions get what. Second, organizational design, which means structuring the company efficiently, maybe by geography or by product lines. Third is portfolio management, where you decide which businesses to buy, hold, or sell. And fourth, strategic trade-offs. This is the constant balancing of risks and returns across the entire group. To really get a feel for this, let's look at a practical, real-world example right from the Nigerian business context, the Genesis Group. Genesis is a classic conglomerate. I mean, look at how they've masterfully executed corporate strategy through complete conglomerate diversification. They don't just do one thing. Their incredible portfolio spans real estate, oil tools, industrial catering, cinemas, hotels, and even quick service restaurants. By allocating resources across these radically different sectors, their corporate management perfectly balances the overarching risk. So if the hospitality sector takes a hit one year, their oil tools or real estate divisions might balance the books, driving overall group growth and stability. Pretty smart, right?
Section 5. The BCG Growth Matrix. Managing the portfolio.
Let's say we were acting as strategy consultants for a firm, we'll call them the Asden Group, and we need to assess their portfolio. We would definitely use the famous BCG matrix to plot each business unit based on its market share and its growth potential. Cash cows have a high share but low growth. They just generate steady cash, so you basically harvest them. Stars have high share and high growth. This is where you take your cash cow's money and invest it. Question marks are high growth but low share. These are risky bets that you really need to carefully analyze. And dogs? Well, that's low share and low growth. As a consultant, you'd almost certainly recommend divesting or selling off the dogs to free up resources. It's a remarkably simple but incredibly powerful way to visualize your resource allocation.
Section 6. Does corporate strategy matter? The bottom line.
Well, academic research, notably by scholars like Bowman and Helfat, shows that, yeah, it absolutely does matter. Corporate strategy is literally the glue holding a multi-business firm together. It directly influences overall corporate profitability by ensuring that resource allocation is actually efficient. It creates the overarching organizational climate and enables different business units to share core competencies, stuff like sharing top-tier management talent or underlying technological platforms across divisions. Without a really strong corporate strategy, a conglomerate is really just a chaotic group of completely disconnected companies. So as we wrap up this explainer on the corporate strategy toolkit, I want to leave you with one final kind of challenging question drawn from Collis and Ruckstad. Whether you're leading a small team, managing a huge division, or looking at your entire organization, ask yourself, can you actually say what your strategy is? If you can't clearly articulate your objective, your scope, and your unique advantage, well, it might just be time to get back to the drawing board. Thanks so much for joining me today, and keep strategizing.